Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com. I just want to take a quick look at Paysign here. First, this weekend I'm teaching technical analysis for non-technicians. It's a course that I've taught before, though this is like the new and improved, revamped one. I've totally redone the whole thing to update it and give you what you need to know to basically go from not really truly understanding how to read charts to get to a point where you have probably a much better understanding than the average guy. I don't care how long you've been trading on how to actually get information out of charts versus just looking at lines and boxes and saying, oh gosh, okay, I know what it's going to do. You don't. You don't. So I'll help you turn what really is kind of chaotic charts into useful information that you'll ultimately be able to make money on. And it's free to members. So if you're not a member, why don't you go ahead and sign up for a free trial. I don't care if you cancel as soon as you've taken the course. So you've kind of hoodwinked me. You really haven't. I just want you to get this information so you can be a better trader. Anyway, so back to Paysign here. This is holding up along the 200-day moving average, and that's what's really interesting to me. Kind of trapped between the 200 and the 150, but you know, that's okay. The thing that's important is this stock fell at one point. It was down over 50% from its high earlier this year, and that's a real big fall from grace. Now, we could see the stock continue down to $5. It was there earlier this year. So it will have been one heck of a reversal. But what I'm suggesting you do is watch the stock. What it should be doing is, if it's going to be a healthy little pullback, this should be continuing to form a base right here. And if it does that, this will give the 200-day moving average a chance to kind of catch up to where the stock is and maybe ultimately hold the stock for a rebound higher. Of course, at the same time, you know, this 50-day moving average is coming down, but you can see it's actually, the slope is actually, if you really look at it carefully, this is a really, really shallow move here. So it's going to be quite a while before the 50-day moving average has relevance. Meanwhile, the stock's just forming this kind of base. So the longer it holds right about $10, the better off you're going to be. So I think you're a little early to buy this stock, frankly. But if it pulls back closer to $10 and at $11, hey, it's about 9%, right? If it pulls back that far, then you can kind of take a shot with a fairly tight stop. So anyway, that's it for this video. And again, don't forget about technical analysis for non-technicians, or as I'm calling it, chaos to patterns. A new course this weekend. See you there.